The U.S. economy actually is in good footing at the moment. We're not in a worse situation than we were. If you look at the first estimate of annual GDP, it's actually the same as 2014. So one could argue that the economy is actually moving sideways, but the difference is in 2015 we have a labor market that's actually very strong. And so we expect that trend actually to continue. Weaknesses overseas would always have an effect in the U.S. economy, but as we said in our forecast, the U.S. economy is less dependent on changes in global demand, and so it will have some effect. It's not going to be zero, but it will have a minimal effect, and it will have a minimal effect on credit union operations. The slowdown in Chinese economy is actually not a new thing. If you look at the long trend growth of China's economy, it actually averaged 9.5% since 1976 when the reform movement started. And in 2012, China's GDP has actually started to fall below its long run mean of 9.5%. And so this isn't really anything new, but I think the difference is this time the reaction of investors are actually more pronounced than in previous cases, and so that's why we see this turmoil in the stock market reacting to what's going on in China. So the good news is, since they have been growing at a slower rate for the last 5 years, that it might be hitting a bottom, and from there we might be expecting a rebound in China's economy.